back and let's talk about IndiQube Spaces. The numbers have come out really good. Revenue is up 45%, coming at 390 crores. EBITDA margin is up 222 bips, almost at 60.8%. Let's talk more on this. We are joined by Mr. Rishi Das, co-founder, CEO, IndiQube Spaces. Mr. Das, hi, morning. Welcome to the show. Good set of numbers reported by you. Congratulations over there. Now, with margins.
Good morning. Yeah.
With margins expanded over 200 bips year on year, what are the growth drivers behind this and overall growth outlook for Q4 FY26 as well as FY27? If any guidance that you can share.
Yeah, so thank you so much. The growth drivers are, I must say that the very robust uptake of office spaces in the country. Like if you look at for the calendar year just gone by, almost 82 million square feet was the total absorption. And more specifically, the calendar quarter four, which is October-December, absorption was about 22 million square feet. So it's a record absorption. So that is helping. And our industry in particular, if you look at about 21%, 22% of the space that India absorbed last year came from the managed offices, the co-working industry. So that is the thing. And more specifically, the global capability centers, which constitute about 40% of our portfolio, they continue to grow in a very, very robust way. We are seeing a lot of expansion happening in tier 2 cities also over there. And if you look at from a growth point of view in the Q4, we currently have a total area under management of 9.5 million square feet, out of which about 6.3 million is occupied. So we have enough headroom, a lot of supply in the pipeline, which we'll be adding in Q4 as well as FY27. So we are very hopeful and confident that like this quarter, we should be able to grow north of 30% typically in the Q4 as well as basically the next financial year.
Right, Mr. Das, also what is the demand that you're seeing in tier 2 and tier 3 cities and which segments are likely to drive this growth?
So tier, if you look at, see the whole thing post-COVID has been jobs are going where people are. Unlike earlier, when somebody like me joined the industry, people were going where jobs were. So that's quite a big shift in the industry that has happened. And as a result, we are seeing cities like Coimbatore or Indore or Bhubaneswar or any tier 2 city you pick up for that matter, we are seeing a lot of movement of jobs over there. Also, as you will know, the mid-cap IT services companies are doing well. And a lot of them pre-COVID were more lopsided, concentrated, say in Bangalore or Pune. And now we are seeing even those companies are increasing their pan-India footprint. So a lot of growth is on account of this whole shift of jobs going where people are is a key driver. And of course, the whole physical digital connectivity is so good today in India. And India has 50 cities whose population is 1 million plus. If you compare with China, has about 120 cities with a population of million plus. So India is continuing to add newer cities with a million plus population. And I think a large part of growth we are seeing is happening because of the distributed offices concept and all coming in.
Right. What is actually the demand you are seeing in GCCs and what is the outlook over there then?
So as I said, GCCs continue to be about 40% of the portfolio. And if you look at the overall absorption in India, it is very similar. And if we were to zoom in more specifically to South India, typically, which South means Chennai, Bangalore, and Hyderabad, these three cities combined absorb about 50% of office space at a national level. The interesting part is that 80% of the global capability center growth has concentrated in South India. And we, somebody like us, being the largest player in South India, we see that we are seeing a lot of basically tailwinds from GCCs because a lot of GCC growth is happening in South.
Right. Mr. Das, finally, what is the seat addition that you plan for FY27?
See, FY27, as I said, like if you look at traditionally, I can't exactly forecast on the future, but if you look at our past, about 1.5 million odd square feet of space we have added annually. And if you translate that, this comes to about 35,000 seats. So 35, 40,000 seats is what we see that whatever we have done historically, we'll be able to continue and maintain that kind of a seat addition.
All right. With that, thank you so much, Mr. Das, for taking time out and talking to us on the numbers today. Thank
Yeah.
you.
Thank you, Kavita. Thank you, Ankita. Yeah, thank you.
All right. With that, it's time for a short break. But then post that, we have one more management to talk on their Q3 results. Stay tuned.